Hi, welcome to the Market Alert for Thursday, the 22nd of January 2015. Starting off in the 5-minute chart as we normally do, we can see the first bar for Wednesday's session opened at around the 17,450 psychological line, straight down to the 17,400. Reversed off this with the next bar being 100 points, going from 17,400 to 17,500 there. The market then just trading through a bit. You can see the increase in volume here, forcing the market back down to this psychological line, back to this psychological line, back to this psychological line, and then eventually closing through this one, and then trading sideways, coming back on this bar, but then reversing straight back above the 17,500 here, up to the 17,550, and then up to the 17,600. So if you ever wanted any proof that the traders trade to these psychological lines, then here you have it, because it's again, it just shows time and time again how these lines are actually used by the professional traders. Even if they close below on the one occasion, reverse, and then they drive the market up to these. So these lines can be used as profit targets above and beyond the scalp, because of the repeatability of these. Of course, the volatility in the market was huge in the first part, which I have warned about, and today is going to be no exception, which I'm going to come to in just a minute. But here we see the market coming back to the psychological line here at 1825 at 17,550. And we had a potential short. We can see the market going through the 20-point scalp there, but look where it trades to again, down towards the psychological level there, the low being 17,501. Eventually it comes back down to this without breaching the entry price. And again, you can see you can get a few more points out of the trade by using the psychological lines as a target. This is the same later on. This trade coming in at 2015. We are pushing the limits of being in a trade before the close. 8:30 is generally a no-go area and beyond. So 15 minutes before, you've got this potential signal here. You can see the market going up to the psychological level, then going through resistance to the left. But of course, we are now in the realms of the market getting towards the close. So 20 points before the close is a good trade. Had the market have not closed at this point, as you can see from the entry price here, we have 47.5 points. So that means that the market must have continued higher, which it did, and look where it's traded to, the next psychological level. But of course, it wouldn't have taken as many hours to get to that point had the market have stayed open and the normal hours have prevailed. But of course, we are stuck in a situation where we need to consider getting out of the trade, unless you're going to hold the position overnight, of course. And in the daily chart, so we have a very interesting picture here for today. We have an explosive pattern, in my opinion, for the market to move to the upside. And what we're going to get to create this is, today we've got the European Central Bank going to announce that they're going to print more money. So the insanity prevails. It's not worked for the last 8 years, so let's continue doing it. And as I've said to a lot of people, it's a bit like giving a drug addict drugs. You get really good highs to begin with, but then eventually the effect wears off. And unlike other occasions where they said they're going to print X billion or trillion in one hit, it looks like the rumour mill at the moment, they're going to print 50 billion per month, which is just over $500 billion in the next 12 months to try and get the economy going in Europe. It's an utter waste of money. All it is doing is burdening future generations with taxes, debt burden. It will never work. It's a fiat currency. But that's another subject for another day. The concern here today is that this is going to send the markets skyrocketing, because this is where the money ends up. It always has done. Finds its way into the stock market, and as you saw last month, or may have not seen, 18 billion was divvied up between the bankers. Well, that was your QE tax money, effectively going into the asset bubble known as the stock market. So Watch the market go through the 17,600 level, which you can see here. And where's the upside target? Well, let's have a look. We'll draw in a Fibonacci retracement from here. We've got 17,749. And beyond that, let's go to the high down to the low, and that gives you the other ones as well. Look at that, 17,750 comes up twice with a 62 and a 76% retracement there. So that's likely to be where the first stall in the market in the up move, should the ECB follow through. If they don't, of course, the market's going to fall out of bed. But Greece has run out of money yet again. Every 2 or 3 years they require money to keep the economy propped up. And also, if you do the research, you will find that there's been a run on the 5 major banks in Greece as well with the forthcoming election, because the potential new incumbent is talking about withdrawing from the euro as well, which, of course, Merkel would never allow. So there's a bit of a problem there, but it's not being reported by the mainstream media. These things never are until they're a catastrophe. And then, of course, the rest of the mainstream media is designed to whip everybody and keep them in fear. So that's not going to happen until we have the major financial crisis that is actually around the corner. On the news front, let's have a look. We've got, obviously, the main thing today is the ECB announcement. This is out at 1:30 p.m. We have got all of the interest rate decisions prior to this, and they may release it before the conference. We may get an announcement at, let's have a look, at 12:45 of what they propose to do, and then at 1:30 Draghi is going to actually reinforce his lunacy of why he's actually doing it. But we'll wait and see. There's nothing after 2:30 p.m. apart from crude oil inventories, which of course we know about at the moment is on a downward trajectory there. Right, let's have a quick look at the implied volatility down at 15.15. If we get a big move in the underlying market today, then expect this to drop also. Right, that's it for me for today. I will see you in tomorrow's market alert. As ever, thank you for your support, very much appreciated. And as ever, thanks for watching. I shall see you in the next one.